Well, hello everybody, I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets 4 times a week, asking ourselves one question. What happened today? What does it tell us about the coming ones? As I said, I do this show 4 times a week, Monday through Thursdays, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. And what we're trying to do is we're trying to look at key support, resistance, trend, neoclassical thoughts, asking ourselves, what is it, right? You can pop in here, you can listen to me talk about it in more detail, but essentially we want to know what's happening in these markets at significant price points that tell us what may happen next. And we were at significant price points, basically at new highs. Market backs off a little bit. So does that mean we're heading back the other way? Well, we'll have to take a look at that. It was really fairly flat today. The big moves really wasn't in the markets. The big moves were in the dollar and in the bonds. Because if you look at those, what we got over here, dollar backing up over 1% higher, and look at the bonds, down almost a full percent. And that was what was shaking and moving the market today. Let's look at what those movements look like. And we'll start right there in the OX markets. Let's start with the dollar. So on the dollar, we get a big spike up, gap up this morning. That came off of, the majority of that came off of the numbers out of housing, showing housing starts, rocketing higher. The best, quote unquote, I think since 2007 is the number I saw. Dollar pushes up, pushes back into this big bar. That's a swing point high now. That top is 24.90. We got up to about 25.04. Excuse me, the low was 24.90. There we go. 25.14 was the high. So we're almost to the high. We don't have the volume. This just looks like a bounce that's setting up that range that we said would probably set up. And with the dollar bouncing, what does that do? That puts pressure on price, and that's what we saw today. It's going to go back up, try to test into that little area right there, which is basically this big bar. And so that's what the dollar's doing. That, of course, puts pressure on the euro. And that's what we talked about last night. We expected the euro to pull back some more. The euro did. It pulled back into this big bar. And that pull back into the bar came off this idea that we would get back potentially into this area. And right now it's heading back that way. So it's into this large bar. It's not deep into it. If it stays down here for the week, well, then you might have something going and you can get in deeper. With the euro going down, what does that do? That puts the European stocks back in favor, and of course that is what happened with the European stocks today. If we go look at those, they started shooting back the other way, and we talked about the fact that they probably could push up. And let me grab, we'll just look at the CACs to start with. They could probably push back into this swing point low up here, and sure enough, that's what they did today. And so you can see how all these things are working together, right? It's really currencies and bonds that are moving things. Pushes right back into that low. That low on the CACs was 51.32. What did we get to? 51.24. So we're almost into it. Excuse me, 51.32. So it looks to me like it's probably going to pop into it tomorrow. Not going to have the volume. And it's not going to have the volume with respect to this breakdown bar it's trying to get over. Now it could get a little bit higher depending on what the dollar does, but I would expect that somewhere in this area at most it's going to probably fail. It's just setting up the big range, right, playing out inside the big range. If you look at the DAX came back up and almost got to where we thought it would, and that was back into these swing point lows, doing a full retest regen now off the prior swing point low. It's a bearish retest, got right to it, right? If it's going to fail, it's going to fail here. But look at the volumes coming back into it. Over here you had 1.2, now you're doing 9.6. Not quite the volume, but close. And so, this could actually push a little bit higher. That breakdown bar 11,885, I think that would be the number. I wouldn't be surprised to see it, pop into that tomorrow and potentially fell off of that area. That's the DAX. That's the CAX. If we look over at Hong Kong, and we talked about that they were doing the opposite, trying to build out their range. Well, Hong Kong did that, but the real juice wasn't there. It was in Shanghai. Shanghai shoots back up, gets back over this bar, doesn't have the volume though. Looks to me like it's going to try to get into the top of the breakdown bar now, 44.87, as it builds out its range. Now, I'm sure there's going to be a lot of people looking at the classical stuff here, and they're going to say, hey, that's an ABCD up, right? They're going to look at moving averages, whatever they're going to look at. I think this is the bar to look at. If you get over that, well, it's a little different story, but you got to get over this area right here, and I think that's going to be the tough spot. I don't know that it's going to extend this ABCD up. I think it's probably going to fall back down, right, and continue to build the range. And that's because it's come so far so fast. Now, I could be wrong. It may just continue up, but I suspect that's what you're going to see happen. If we go back to the ox markets, I don't want to quite leave that yet, so let me pop back over there. We're talking about the currencies and how that's playing into this, but let's talk about the bonds as well. If we look at the bonds get under the low, 1864. They close at 118.49, so they're up underneath it. They have no volume down here. A little hanging doji. This looks to me like this is going to try to dig deeper tomorrow, unfortunately, if you're in the bonds. It's an ABCD structure. Again, it's going to be a suspect ABCD down. Projects quite a bit lower if it's going to make the run another full point. That's, of course, when the bonds go down, at least right now at this particular price point, that puts the juice into the financials. So the financials shoot higher. And if we look at them here and on the weekly, you can see they're pushing up to the swing point high on the weekly. Not a lot of volume, but they got over the swing point high today. They're going after the weekly swing point high. That's a direct result of the backup in the rates on the short term, right? So, banks are able to loan it out, not the short term, but the yield curve. They're able to loan it out, get a higher return on their monies, which falls to their bottom line. The real issue, though, is when the dollar goes up, it starts hitting other stuff, right? And so if you go over and you say, okay, what else is happening? Then you can pop over and look at, like, say, the USO. Oil, hammered lower off the backup in the dollar, right? This big rally has been off, well, not the whole rally, but a big part of this rally has been off the dollar being weaker. Let's go back to the dollar real quick. So that dollar, that was, well, actually the highs were back in March and then April. Now go back to oil. March and April. March and then April, right? So this rally has been on the back of a cheaper dollar. As the dollar starts to go the other way, this rally starts to come back. Huge oversupply in this market. If that dollar doesn't help it, it's not going anywhere. Now, it's not quite the same story, but it's almost the same story elsewhere, like gold. Gold makes a spike up and then flat lines. Dollar had a big part of that, right? March to April, same sort of a thing. Now, as the dollar continued to sell off, gold couldn't make its move. Gold comes back today, the big bar up, bottom of that 115.68, gets right to it, underneath it, three pennies under, no volume. If you're going to get a pullback, that's the way you want to see it. We'll see if the gold market actually turns tomorrow, but it looks to me like it's going to try to hold here. Coming back to the dollar, you don't have that much more upside before some sort of a retrace, more than likely. You have tomorrow the Fed minutes. So today it's about rate worries. And I want you to notice what's going on here. For the last 3 years, right, all the news has been good news. And what I mean by all is that it didn't matter if it was bad or it was good. In other words, if the economics came in good, great. Economy's getting better, right? If the economics came in bad, it was great. Fed's going to keep supporting us. Well, now that table is slowly turning the other way to where most of the news is bad news. It doesn't matter if it's good or bad. Most of it's bad. And what I mean by that is look at the data today. You get good economic data after months and months of bad data, and the rates start to back up, bang, like that. And what does that do? That puts a damper on part of this market, starts hurting it, helps the financials, but it hurts most of the others. And so, this dichotomy of everything's good versus now most things are bad, if and when that gets to everything's bad, I don't see what's going to keep pushing this market up. And as I've said for so long now, what's pushing this market, what's keeping this market up isn't this market. What's keeping this market up is markets elsewhere around the world. Let me go back to our charts. I haven't even gotten to them yet, so let's do that right quick. So if we come into our indexes, take a look at these guys. They all go over and under today, but the thing you want to notice on every one of these charts is the over-under, right? It's not a big one, but it goes over, back under, but they're all on higher volume. That's true here. It's true on the NASDAQ composite. You got the same thing here, right? Over, under, more volume. NDX, over, under, more volume. Russell, over, under, more volume. Same thing everywhere. What does that mean? That means it's probably going to go right back up there and test it again. So I would be surprised if we don't see this market try to push up first thing in the morning one more time. You got the Fed coming in with the minutes after, about 2 o'clock Eastern. I suspect that's probably going to be what actually turns this down, if it's going to turn down, and I think it is. Going to retrace back in, right? Set up another little nested ABCD structure potentially. So if I go back to the S&P 500, and if we draw these out now, you've got this ABCD structure that's in effect. It's got about another 10 points to go on the upside. Hasn't quite got there. Now, if you get a pullback inside this, right, maybe you come back as low as this, and then you get the next ABCD structure, really, that comes off of here, right, that can take you up to a higher level potentially. So it looks to me like, this isn't done. Going to try to test again tomorrow, and then potentially get some sort of a small pullback at least coming in off those Fed minutes. That's the way it looks to me tonight. I don't know that, the trades are here. The trades are elsewhere. They're not in the indexes. So you got to either find some individual stocks that make sense. You got to find some indexes overseas. You got to do something different. It's not happening here. All year long, it's been this way. I suspect most of this year it's going to continue to be this way, and that is that every time you think this thing's going to take off, it's going to get pulled right back in. Folks, thanks for joining me. Have yourself a great night. I'll see you tomorrow. Good night.